Good afternoon. Thank you all for joining. Welcome and thank you all for attending this webinar today with Alkami and Datos Insights. Today we're going to be discussing 4 tactics for business banking success in 2024. My name is Jacob Leick. I lead the commercial banking product team here at Alkami. We're responsible for commercial and small business functionality on the Alkami platform. I've been here for 7 years. I joined here from previously from Capital One, where for the prior better half of a decade, I spent time in the commercial bank leading commercial liquidity products on treasury management area. I'm joined here by Christine Berry, and I'll turn it over to you for an introduction.
Thanks, Jacob. Hi, everyone. My name is Christine Berry. I'm the head of banking and payments advisory at Datos Insights. I have been a research advisor for over 20 years now, covering various topics, one of which is small business banking. So I'm really excited today to share with you some of the research that we've recently done. A lot of the data points I'll be sharing during today's webinar come from a recent survey that we conducted of about 1,000 businesses in the U.S., generating between 100,000 and 20 million in annual revenue. Now, each of you on the phone probably defines the small business segment slightly differently. 20 million may go a little bit above how you typically define the segment, but we still see even that 10 to 20 million in revenue segment representing a huge opportunity for financial institutions. So looking forward to today's webinar and having a great conversation. So back over to you, Jacob.
Thanks, Christine. So we have an exciting agenda today. First, Christine is going to share some trends and challenges in 2024, and then we've identified 4 key tactics allowing you to tackle those challenges head on and enter 2024 successfully. So first of all, Christine, why don't you share with us some of the trends that you've identified for 2024?
Absolutely. Without a doubt, we are seeing the current market being pretty challenging for financial institutions, regardless of their size. We're seeing an uncertain economic environment. We're seeing fintechs continuing to emerge and identifying gaps within financial services, financial institution product portfolios. We're seeing customers and members becoming a lot more demanding than ever before. And then, of course, we have an upcoming presidential election, so not sure how that's going to turn out. Now, of course, the good news is with challenge often comes opportunity. And there is absolutely an opportunity for financial institutions with this small business customer and member segment. In fact, our research is showing that about 19% of small businesses state that they definitely or probably will switch financial institutions in the next 2 years. So the big question is your institution going to be one of those that capitalizes on this opportunity? I believe that any institution that has the right strategy, product portfolio in place is very well positioned to grow their market share. So why is it that small businesses are so attractive right now? We're finding more than 80% of institutions today feel that growing their success with small businesses is critical to their overall success. Well, first of all, they're much more aware of products and services than ever before. Fintechs are helping to educate them on the market. They're doing their own research, so a lot of self-information by doing searches, but they're also very comfortable with technology, and that's resulting in them adopting technology faster than ever before. It's also less expensive. They still go to the branch, but they're very willing to use those digital channels to be serviced. In fact, in many cases, they prefer them. So that makes it a lot easier for institutions of all sizes with all budgets to effectively service them. There are also, surprisingly, a lot of institutions, especially community financial institutions, often say that these businesses or members aren't willing to pay for products. Our research actually shows that they are. If you offer the right value proposition, the right product that helps them save time, increase convenience, operate their business more effectively, they will pay, and they are paying fintechs already. And then finally, they are showing a high likelihood to take action and roll out new capabilities. Now, unfortunately, despite how important it is to financial institutions to win their business, we are finding that most financial institutions are falling short. The gaps between what small businesses are looking for and what financial institutions are actually offering still continues to exist, and in some areas is widening. We're finding that 65% of small businesses are going beyond their primary institution to meet at least one financial need. And we'll talk about later on in the presentation what some of those areas are. 57% of small businesses, when they look at the products and services that their primary financial institution is offering, they're saying that most of them they wouldn't be willing to pay for. Now, I just mentioned a few minutes ago that they are willing to pay for the right products and services. So we'll talk also about messaging and what they consider to be valuable. We're seeing that the online channel is their preferred channel, but mobile continues to grow in popularity, and we're seeing a lot of businesses that are mobile first. So it's important that you enhance your mobile banking capabilities, because many small businesses feel that those can use a little bit of enhancement. And then finally, we're seeing that 33% of small businesses, when they're looking to switch institutions, they're looking for better online tools and help with cash management. And not all institutions are offering those capabilities. So over the next hour or so, we'll be touching on some of these topics and helping your institution to better position itself for success and to capitalize on new opportunities in this market.
Awesome. So this first tactic is really tackling the first challenge that Christine identified, where a majority of small businesses are moving beyond their financial institution for at least one financial need. And so the tactic is to leverage a modern technical architecture, which will ultimately help you grow deposits and deliver personalized experiences at scale. So Christine, maybe you can kick this off and kind of share a little bit more insights here.
Absolutely. As I speak with financial institutions of all sizes, two things come up very commonly in those conversations. The first is the desire, the need to grow deposits. They're also looking to deepen relationships with their customers and members. And a key part of doing that is through a more personalized experience, demonstrating an understanding of their needs. And what sits right at the center and enables institutions to be able to do that is having a modern technical architecture. So why is this so important? First of all, as I mentioned, small business needs continue to evolve. They're becoming more demanding, and it's critical that institutions stay ahead of those needs, position themselves to be able to stay ahead of key trends. And what we're seeing with modern architectures is that they have that flexibility. They have the configurability, and that's really critical. So you're not dependent on your technology provider to make all the changes. You can make some changes on your own without touching code, and it offers that flexibility that you need to move fast, to be able to move and offer new products quickly, make small changes to address needs. They also enable a much more personalized experience. Customers, members are looking for their institutions to treat them as if they're a market of one, understand specifically what each business user is looking for, and address those specific needs, offer an experience that's personalized to them. When you're able to do that, it builds loyalty. It positions your institution as a partner, and it will help your institution ultimately to grow deposits. And then finally, newer architectures are much more open. Older legacy platforms are very difficult to integrate with. Many of you have probably experienced that. It could be costly. Modern platforms have APIs. They much more easily integrate with some of the third-party systems that your institution may be using, and just offer a much more seamless experience, higher levels of automation. And we'll talk about why all of that's so important during the presentation. So how is it that small businesses are reacting to the current environment? Things are changing quickly. What small businesses are telling us, and this is a recent survey that we conducted, for this year, they're telling us They'll likely be borrowing less, spending less. Things are just more expensive. They're going to be moving to assets that are higher yielding, things like CDs, or maybe even switching institutions for higher rates on deposits. And then also they're looking for those tools. They're telling us that they're planning to invest in more tools to better manage their finances efficiently, looking for more tools to better forecast. So it's important that your institution recognizes these changes in behavior and positions itself to be there for institutions and deliver the type of experience they're looking for. I mentioned a personal experience is very important to keeping their business. Just this slide just has a little bit more detail on what exactly they're looking for. Dashboards are critical, and dashboards, we're seeing the importance of these in just about every technology, but I'd say especially in digital banking. It's the entryway into the platform, and end users want to be able to determine exactly what appears on that dashboard. And they want it to be information that's relevant to them, not cluttered with a lot of information that they don't care about. So being able to pick and choose what appears on the solution as they navigate through the solution, they want it to align with the way that their business works, their role in the organization. So they want persona-driven journeys. They also want information that's not only easy to access, but it is relevant and real time. It's actionable as opposed to just a data dump. They're looking for a user experience that's seamless. It's all about reducing friction in their experiences. And as they move from product to product, they want that experience to be seamless. They don't want to have to log into multiple applications or have a different user experience or look and feel across products. And they also want product bundles that are relevant to them. And this is where the whole greater use of analytics comes in, and financial institutions are recognizing that this is critical to delivering that personalized experience, leveraging analytics to predict what customers and members are going to need. Offering that Amazon type experience that we've all become very used to and is now expected in their banking experiences. And finally, modern technology is really critical to leveraging those much needed deposits. And financial institutions are very focused on this right now. In fact, 93% are stating that it's more important to them, or their focus on growing deposits is higher or much higher than usual. I can think just a few months ago, institutions were flush with deposits. Now everyone's scrambling to gather those deposits. And when we talk to large and mid-sized institutions, so many of the institutions that you're competing against, 33% plan to grow deposits by better leveraging data and analytics for cross-sell. They're using it to target profitable clients. And then also there's a role and focus on investment in digital account opening. 69% of institutions are focusing there. And I do want to spend one more minute talking about that account opening because it is so critical. It's typically the first impression that a customer or member gets of your institution. And investing in it is becoming table stakes to remaining competitive in the current market. I'm actually doing a study right now, and it's amazing when I talk to institutions that have just recently invested in account opening. Some of them are seeing a tripling of deposits, or just a huge decline in the abandonment rate that they were seeing. Because if you have a bad experience, small businesses have so many options, they're going to go elsewhere. So 31% of businesses are telling us that the onboarding process at their institution is taking more time than expected. And as you know, we as a society are very impatient when it comes to anything that's taking a long time. So that speed, automation is really critical in an account opening offering. Also, 42% of businesses view the onboarding experience at fintechs to be more efficient than what they're seeing at banks. So there's much to learn from some of those fintech companies. And then finally, they're telling us, small businesses are saying just how important digital account opening is. 56% are saying that it's important for keeping their business. So something that absolutely institutions should be taking a step back and looking at their offerings.
Thanks, Christine. So what we wanted to do is provide you with some tangible things to look for when evaluating the overall platform to see if it kind of meets a lot of these criteria and things that Christine outlined. So the first one that we've identified is having a single platform across consumer that scales all the way up to commercial is critical for the institution to be able to create a better experience in transitioning users as they grow, or even identifying consumers that are behaving like businesses and automatically converting them, minimizing the lost data along the way, and ultimately transitioning them to more profitable products and services. The second one is a real-time integration with the core. And this is critical in providing businesses with instant access to information that they expect. Christine mentioned the Amazon-like experience, but having instant connection with the core kind of is one of the foundational level things that ultimately allow you, the institution, to create a better experience. Next one is a superior payments user experience. And this goes beyond just, hey, offer the ability to send ACH or offer the ability to send wires or RTP. That's more like channel-based experiences. What we're kind of recommending or seeing as critically important is a more hyper kind of personalization around payments. Look for something that allows a business to solve problems like submitting payroll, for example. Those are the things that really are exciting and things that they're looking for. And oftentimes, what we see in our experience is what's causing them to look beyond their financial institution. And the last one is a data analytics capability that enables targeted marketing. And this is really critical in identifying, again, scenarios where, for example, you have a business kind of operating within your consumer portfolio, or just identifying businesses that have additional needs that are currently unmet. So those are basically high level the things we've identified as a modern architecture overall. So the next tactic is really looking at the trend that Christine identified early on, which is a large percentage of businesses really don't believe that their financial institution offers products that they're willing to pay for. And so tactic number 2 is delivering real-time syncing and tight integrations with third-party systems. So I'll turn it over to Christine to cover this tactic.
Thanks, Jacob. And that tight integration is becoming so important. In fact, it's not just it's integration with accounting systems for sure, but it goes beyond that. So as we speak with small businesses, who many of them, at least 50%, are using some type of external accounting system. Many are using QuickBooks. That definitely has the largest market share, but we're also seeing a lot of users using Xero. We're seeing Autobooks is another one that's growing in popularity. So there's lots of options out there, but small businesses are finding that they can't be so dependent on Excel anymore. It's too manual, it's error prone. So they're using these external systems, but when they use them, they want to have integration with the bank platform. Integration just to share information back and forth, but even in some cases to be able to perform transactions outside of the bank portal, but still have it be reflected when they go into the bank platform. So you can see here how important it is to small businesses to have that tight integration with their accounting system, as well as industry-specific third-party systems. So in this case, we're talking about, for example, if it's an HOA or a property management company, integration with a Yardi or an application like that. that we're also increasingly seeing businesses using. I mentioned earlier, more than 65% of businesses are going beyond their financial institution to meet some need. And it's important that your banking platform integrates with some of those systems. Fintechs are having a huge impact on this market right now. And there's two ways to look at it. I can remember years ago speaking at a conference, and financial institutions didn't even have some of these emerging fintechs on their radar. Then it switched to these are competitors and we have to be afraid of them. I think now we're at a situation where it's really co-opetition is how they're viewed. They're still competitors, but they are also important partners that they need to learn to work with. At the end of the day, small businesses are increasingly going beyond their institution. If there are gaps, that they need to fill them. They feel they have no choice, but they'd prefer to get capabilities from their financial institution, who they trust, who they feel the security is in place with. So by forming that partnership, it's giving them the best of both worlds. They're getting those expanded capabilities, but also have the security of working and integration with their bank platform. So you can see here, regardless of size, it does grow a little bit more important as businesses become larger. But most businesses today want to see their primary financial institution working with and integrating with more fintech companies. Some of the key areas where we see them doing this, payments is a huge one, and we'll talk a little bit more about payments later, but especially faster payments in particular. If a bank or credit union isn't offering instant payment capabilities, they're going to banks for it. Any kind of money management tool, invoicing, expense management, lending, these are the areas that we find most often small businesses are going beyond their institution. Why are they doing it? Certainly to fill gaps, but we're also seeing the value proposition continuing to expand. It's not just about filling gaps anymore. They're finding some of these fintechs easy to use. They're seeing the reporting capabilities that they offer to be superior. So definitely there are benefits. It's also something else that I'm seeing that's interesting in the market. It used to be where a lot of institutions, when they partnered with a fintech company, they wanted to keep it secret, give the impression that they were building out some of these capabilities. Now I'm seeing institutions of all sizes really advertising the fact that they're working with these fintechs because they want to be aligned with innovation, which is the perception. Small businesses consider these fintechs to be very innovative. So lots of benefits with working and partnering with fintechs right now.
Thanks, Christine. So a couple key takeaways here. First of all is these fintech partnerships should really be viewed as an opportunity to generate income as opposed to overall threat. And a lot of data suggests that businesses are absolutely willing to pay for the right capabilities. So if you identify the right key partnerships that match your portfolio, there's a lot of opportunity for institutions right now.
Yeah, and don't be afraid to charge for capabilities. It's interesting. One of the things that we found in our survey, and I love this stat, the number one reason why small businesses don't pay for capabilities is because their financial institution doesn't charge them for it. So they are willing to pay, and we're seeing it all the time that they're paying these fintechs. So there is a definite revenue stream there that's untapped right now.
Totally agree. And I would say challenge your technology providers to help enable some of that stuff for you and automate the billing, whether it's through account analysis or through a hard charge billing directly on the core. So tactic number 3 is adopting strategic treasury management strategies, allowing you to support your businesses as they grow and ultimately move up market. So Christine, can you share some thoughts here?
Sure, and that's also critical. And Jacob touched on this earlier, that you want to be able to position your institution to be able to grow with small businesses, having everything on a single platform so that it's a very easy transition as they need new capabilities. They can just add them. rather than having to go on to a different platform or having to learn a different type of experience. So what we're seeing from small businesses, and this just provides a few examples of where we're seeing them becoming a lot more sophisticated in their needs. I already mentioned they're tech savvy, they're using technology. They expect a robust functionality from their institutions so that they can continue to grow with them. They're increasingly looking for real-time or instant payment capabilities. They want a full range of products and services, and that includes both on the deposit side as well as the credit side. And again, if you can offer that level of integration across both, it only helps your institution. An important point here where they actually specify that they're looking for solutions tailored to them rather than adapted consumer experiences. We see a lot of institutions, and it tends to be some of the smaller ones that try to service small businesses from a consumer platform. The challenge with that is, first of all, a lot of the capabilities are offered for free, but also when we look at the needs of small businesses, they're much more closely mirroring those of commercial customers than consumers. You know, with the exception of micro businesses, we're seeing them looking for capabilities like positive pay, for example, or more payment options. And you don't necessarily have those on a consumer platform. So you're leaving money on the table because they're capabilities that you could be charging for, but you're also leaving them underserved. And as they become more sophisticated, have more needs, they're going to not be able to easily add some of those capabilities if they're on a consumer platform. So definitely look for ways to start to migrate those customers off of consumer platforms, and don't treat them like consumers, treat them more like the businesses that they are. And then finally, they're looking for money management tools, especially in the current environment. And small businesses just in general, many of them are managing their finances on a very tight budget. So it's important to them to be able to make good forecasts, to have a true picture of their cash position, to be able to make good decisions, to know that when they have pending payments that they're able to cover those payments. So having strong tools in place that enable them to better manage their funds is really critical to them continuing to be successful. What we're finding, unfortunately, though, is that most institutions aren't yet offering the right product set. I already shared this stat at the beginning that 57% of small businesses feel that their institution is offering few products and services they'd be willing to pay for. A lot of this comes from some businesses still being serviced from the consumer side, but also a lot of institutions feeling that small businesses don't need a lot of the capabilities. When we start to talk to them about different capabilities that they could be offered by their institution, they get excited. You know, I gave the example of positive pay. That's a big one. We just recently did a study where, you know, small businesses recognize they have lots of concerns about fraud. Many of them are still using checks, or if it's ACH, there's also ACH positive pay that they're interested in. And a lot of institutions are not yet offering those capabilities to these small businesses and leaving them vulnerable. So there's lots of opportunities without necessarily having your institution offer new capabilities. They're available already in your product portfolio. You just have to make them available to small businesses. Also, 28% of businesses state they would consider switching institutions for more sophisticated digital banking capabilities. That also is critical. Again, I mentioned before that digital is now, especially online, the preferred channel for small businesses to interact with their financial institutions, and they're now switching institutions for that right experience, for the right capability. So it's not just about offering the best rates for credit anymore. Digital is critical to retaining and attracting new customers. 65% of businesses, and I included the stats, I thought it was really interesting, 65% of them are saying that they would be willing to work with a community financial institution if they offered comparable products and services to some of the bigger institutions. Right now, the big four banks dominate this space. They have more than 50% market share, but you can see if you can position yourself, and I've spoken with small businesses, small financial institutions that have deployed the right digital platform. So the digital platform is really important, and you have a great partner in Alkami. Offering the right platform can enable you to compete head to head with those big banks, and I see it all the time. So, make sure, take a look at what you're offering, make sure you have the right platform, you're offering the capabilities that you have available, and you're very well positioned. Now, there's a lot of small businesses that aren't happy. I showed that stat of the large percentage looking to switch institutions. So some of the things that we hear from small businesses as far as capabilities they're looking for, reporting is really important to them, getting them off that Excel spreadsheet. If they do have multiple bank relationships, enabling them to be able to at least see balances across those relationships. Robust payment capabilities are critical, and we'll talk more about that, but real-time or instant payments in particular is important. We are finding more and more small businesses, especially in the global economy that we have, are doing business with international vendors or suppliers. So they're making international payments. Positive Pay, ACH Positive Pay, I already mentioned. Anything frictionless, that's fraud prevention. Fraud is one of the biggest concerns that they have right now. So offering those capabilities are critical, as is some of the other things that I mentioned, that integration with ERP, enabling them, or accounting systems, enabling them to perform transactions outside of the bank, and then having the right tools and the right digital capabilities are really important. This last slide for this section I put in because I thought it was interesting to show how the market is changing. So right now, the current situation is about 50% of tier 2 and tier 3 banks in the US consider themselves to be weak or not where they want to be when it comes to serving businesses greater than 10 million in annual revenue. I'd put credit unions in that same category. Very good at servicing the micro businesses, but not yet offering all the capabilities to grow with these customers and members. As we said, it's so important to be able to do. But we are seeing a switch. We're seeing a lot of institutions now going, first of all, becoming a lot more commercially focused, recognizing the importance of better meeting the needs of small businesses, but their attitude is changing, and this really excites me about the market. They're going beyond their core providers in many cases and going to some best of breed front end providers. They're making they have a strong desire to grow their footprint in this space. They're making technology, or they're seeing it as a way to differentiate in the market. And that's exciting to me because it gives me a lot of hope that a lot of your institutions are going to be more and more successful in this space going forward. And there's so much opportunity for you to win going forward. So just wanted to share that this bit of good news. At least 40% of institutions now are taking this space seriously and doing a lot of the right things, partnering with the right companies like Alkami to become more successful.
Yeah, and I guess what we have identified here is key tactics in being able to support businesses as they grow. I think, Christine, what you talked about earlier in the presentation, the previous section, was creating personalized experiences, and that's ideal. However, the downside of a personalized experience is oftentimes a business may not know that you offer capabilities that they need, and you don't want to create then a scenario where they just instantly look elsewhere for those. So the first one that we've identified is using data to identify when a business perhaps needs additional capabilities, be able to target them with specific marketing, or create leads for perhaps a treasury sales team, and being able to reach out to businesses and offer more advanced capabilities. The second one is leveraging back office tools to overall reduce the complexity associated with this transition. A more modern digital banking platform allows you to do that with a few clicks without having to add 1,000 different permissions for each and every account and user on the platform. And then the next one is around just overall creating a approachable user experience for businesses of all sizes. And so look for something that allows the complexity to scale up. I think I mentioned earlier, or I didn't mention earlier, but there's a quote from Leonardo da Vinci that we throw around internally with our design and dev team, that simplicity is the ultimate sophistication. So don't necessarily confuse something that like a sophisticated needs of a large commercial client with something that needs to be very complicated with 1,000 checkboxes and whatnot. Oftentimes, you can still offer very powerful, sophisticated capabilities in a way that doesn't interfere with the overall user experience for the masses. So you don't want to expose all of your complex, capabilities to your small business segment to create just an unnecessary amount of friction. And the last one is, when you do this, then you're able to support your businesses and minimize attrition, but also attract businesses across various different segments. And when you're able to do this successfully, the numbers really speak for themselves. So we can actually share some information from the Alkami platform. And when you have a successful strategy here, you can see a higher deposit growth, 24% higher loan growth, better return on equity, return on assets, and overall increases in revenue growth. So some exciting stats and things to kind of look forward to if you're successfully taking advantage of some of these opportunities. With that, we can move into the last tactic, which is really targeting the stat that Christine provided around 1/3 of businesses would consider switching financial institutions if they're able to receive better online tools. So the tactic we identified here is really owning the payment experience and exploring instant payment capabilities. So with that, I'll turn it over to Christine to share some insights.
Thanks. Payments are such a huge focus right now for financial institutions. There's a lot of change going on. There's new payment types being offered. Most recently, FedNow being offered into the market, and sort of payment rails. What we always tell our clients is that focus on the payments. If you own the payment, you own that member or customer. It's a sticky business, it's a critical business, and it will enable you to, if you do it right, become the primary financial institution for that small business. What we're finding though is, and this is one of those glass half full, glass half empty, depending on your personality, but 52% of small businesses prefer to make electronic payments from their financial institution's online or mobile site. So slightly more than half prefer financial institution, but that also means that 48% are going elsewhere, and they prefer either the bill or direct model, meaning that they go to a Verizon website to make a Verizon payment, or they're going to a fintech to make a payment. So still a lot of room for improvement, or a lot of institutions falling short of small business expectations for payments. 47% of small businesses are actually going to a fintech company for faster payment capabilities. So this tends to be, when we look at payments, the biggest gap. They're looking for more payment options. They're looking for greater speed. So they're going to fintechs for that. But fortunately, we are seeing more financial institutions investing in this area. A lot of small businesses are starting with, smaller financial institutions are starting with FedNow. A lot of the larger banks went with RTP, but we are expecting to see more and more institutions offering real-time capabilities, Zelle for Business, for example, just more options for smaller businesses. And then, of course, 30% of small businesses, I mentioned this earlier, are making international payments, and 30% may be interested in doing so. So make sure when you look at your payment strategy, you don't underestimate their willingness to also make these more global international payments. This slide shows the types of payments that small businesses are currently making. Interestingly, as new payment types are added, we're not really seeing the elimination of any payment types. It's just more and more added to the portfolio. And it puts a lot of pressure on financial institutions to continue to keep up with all of these changes, roll out new payment capabilities, because whether a small business is ready at this point to make a certain type of payment, they do at least expect their institution to offer it. So you can see when you look at some of the, the same day ACH, the Zelle, the real-time payments, adoption isn't quite where financial institutions would like it to be, but there is a very high expectation that institutions offer these capabilities. So it should at least be a part. If you're not currently offering these capabilities, it should at least be on your roadmap. Because it is becoming table stakes. Small businesses are starting to expect some of these capabilities, and they are showing plans to use it. You can see 40% of the small businesses in our study said that they're considering using instant payments. So they're not yet using it now, but they're considering it, and many of them plan to actually do so. 15% state that they'll increase their use of RTP or FedNow in the next 12 months. So again, even if you're not yet seeing the adoption, it's kind of a chicken and egg scenario. It's hard to justify rolling out these capabilities if adoption isn't there yet, if you're not necessarily hearing the demand from your customers or members. But at the same time, you need to have it rolled out to be ready for when they do need the capability or start using it. Because 56% of small businesses are saying that it's very important or required that their financial institution offer it. So there is that expectation. And when your institution doesn't offer it, they form opinions. They start to think that you're not forward-looking. They start to look elsewhere toward other institutions. So again, you should at least be planning for the rollout of some type of instant payment.
Christine, I feel like in your first stat, saying 52% of businesses would prefer to do payments through the financial institution. I fall under the glass half full population, and I personally am very energized by that, and I believe that the reason why so many businesses want to do that is because they understand the threat of fraud. And they do view their financial institution as a trusted source to send payments. So we just have a stat here on the number of businesses that are reporting some type of payment fraud overall. And so one of the key takeaways here is what we as a financial institution, what you want to try to avoid here is adding too much friction to the payment experience. Specifically on the fraud side, because you don't want to ultimately a business. What I find is specifically small businesses will gravitate towards the path of least resistance. Definitely, the primary focus, especially if you're working with a business owner, is like running their business, and they view banking as kind of like a necessary evil, and so they definitely see the value in working with their financial institution on originating payments, but they want to make sure that they can do it very quickly and get on with running their business overall. So focus on a really low friction risk capability for payments. Specifically look at leveraging real-time transaction anomaly detection, and not just anomalies associated with the payment itself, but look at something that takes into consideration the entire ecosystem. And this is where real-time integration with the core is key, because these more modern anomaly detection systems are able to look at all transactions posting, look at all activity, all logins, all different IP addresses, times of day, And those are all things that are taken into consideration at the moment a payment is originated. And this is key, especially as payments start moving more and more and more towards real time. You, as an institution, need to be able to identify fraud instantaneously. The next one is, just this is more basic, but very important. Establishing different limits based on the different types of transactions that are being overall originated, and specifically down to the company level. And then finally, give businesses control over fighting fraud. Again, they are definitely aware of the threat, and if you can offer self-service around fraud prevention capabilities in a really streamlined way, offering a great user experience, I think you'll be surprised with the number of businesses that are willing to do this and pay for it also. I think, ACH and check positive pay are great examples of that. So let's move on to Christine, and you can share with us some final thoughts.
Sure, happy to. So the first thought is there's a recognition that this segment is not an easy one to service. They're very demanding. They're large in size. There's more than 30 million of them in the United States. They have very specific needs. They need some hand-holding, but also want independence, and they ask for a lot from their financial institutions. But if your institution does make some of the changes that we talked about, make the right investments in technology, there really is a huge opportunity. There's untapped revenue potential with this customer or member segment that's for the taking for those institutions that make the right decisions. Also, don't feel that you need to go at it alone. Leverage your technology partners. So if you're a client of Alkami's, work with them. Make sure that they're, provide insights, suggestions, work with advisory groups, make sure that the roadmap continues to stay relevant, leverage them for best practices. They're working with so many financial institutions. They're learning a lot from those different clients. So understand what the market is doing, collaborate with other Alkami customers. And also, we talked a lot about partnering with fintechs. Don't feel that you need to do that vetting. I know a lot of smaller financial institutions don't always have the resources to vet this landscape. There's so many options out there. Look to your technology partners to do some of that vetting for you, and many of them are doing that. They can suggest partners in different areas. If you're looking for payments or expense management or invoicing, they can make suggestions for you. Having the right partners in place, especially digital banking, given it's so important to small businesses, is really critical to your success. And then, when you're looking at partners, make sure that they have a lot of the qualities and the capabilities that we discussed during today's webinar. Make sure that their platform is modern and open and easily integrates with accounting systems and other third-party fintech systems. Make sure that the functionality is robust. Try to move some of those smaller businesses off of consumer platforms onto business banking ones where they're getting the business capabilities that they need. Look for tight integration with third-party platforms, high levels of personalization and configuration in a platform, and focus on that roadmap. Make sure that it's forward-looking. I speak with a lot of clients working with a lot of different vendors, and they are not all equal. So take the time to look at the roadmaps, look at the level of service that's offered, and make sure that the partner or the technology provider that you select is a true partner. And then finally, I think Jacob and I said it multiple times throughout the presentation, so hopefully you will go away believing us that small businesses truly are willing to pay for the right value. So make sure that first of all, you're charging them for capabilities, but really make that extra effort to connect the pain points that they have with the value proposition that products and services are offering. And they will pay for those capabilities. So it'll be a great new revenue stream for your institution. So good luck with your strategies. So Jacob, I'll pass it back over to you.
I just want to thank you all for joining. Feel free to reach out to us if you want to learn anything else about the Alkami platform. Thank you, Christine, for your wisdom today, and thank all of you for joining. Thank you.
Well, thank you. It was my pleasure.